Want to know why wealthy people love debt? Here's a shocking truth. They use debt to become even richer by buying more assets. Imagine this. You have money, but you borrow more. Why? To buy things like property or stocks that increase in value over time. Rich folks know a secret. Not all debt is bad. The game changer is using borrowed money to acquire assets that earn more money than the cost of the debt. Take real estate, for example. Wealthy investors mortgage properties not just to own them, but to leverage those assets for more. Picture owning a building that's rented out. The rent covers the mortgage payments and possibly even more. When your properties increase in value and you still owe the same amount, that's a profit right in your pocket. It's like magic, but with numbers and strategy. By using smart debt, these investors amplify their buying power, turning borrowed dollars into wealth-building machines. It's a cycle of continuous growth, one asset at a time. Want to uncover how this could work for you? Let's dive deeper into this fascinating world of smart debt strategy. Consider the concept of creative financing. Wealthy individuals often partner with others to pool resources, using less of their own money while minimizing personal risk. It's about spreading the investment over multiple properties or assets, substantially increasing their investment reach. Then there's the tax game. Rich investors love debt partly because the interest on many loans can be tax deductible. This means they're effectively paying less in taxes, boosting their after-tax returns. It's not just about borrowing money, it's about smart borrowing. They're optimizing every dollar to stretch further. And what about stocks? Margin debt allows them to buy more shares than they could solely with cash. While riskier, if done wisely, this can exponentially grow their investments as stock prices rise. Every move is a calculated risk, not a gamble, using historical data, trends, and financial expertise. It's all about understanding the difference between good and bad debt. Good debt generates revenue or appreciates over time, creating more wealth. So every time you hear someone say debt is bad, remember, rich people have a very different story to tell. Are you ready to rethink what debt could do for you? Now, let's shift gears and explore how wealthy people manage risk when leveraging debt. It's not just about borrowing, it's about strategic planning. They utilize financial tools like insurance to mitigate potential losses. For instance, when investing in real estate, they won't just rely on the property's appreciation. They'll protect their investment with insurance that covers everything from structural damage to loss of rental income, ensuring their asset remains profitable even in tough times. Moreover, diversification plays a pivotal role. The affluent don't put all their borrowed eggs in one basket. They spread out their investments across different asset classes, stocks, real estate, bonds, to cushion against market volatility. This way, if one sector takes a hit, their entire portfolio doesn't crash. Another tactic is maintaining strong credit scores, which allows them to secure loans at lower interest rates, further enhancing their profit margins. Wealthy individuals consistently monitor their credit health, ensuring they can access favorable financing when opportunities arise. It's a sophisticated balancing act, blending risk with reward to build wealth over the long term. So while debt sounds daunting to many, for the wealthy, it's a powerful ally. Interested in learning more tricks from the Millionaire's Playbook? Let's delve into the mindset that drives these debt strategies. Wealthy individuals see opportunities, not obstacles. They view debt as a tool for financial growth, not as a burden. It's this innovative perspective that helps them identify opportunities where others see risk. Networking and relationships are crucial too. Rich people often surround themselves with financial advisors, real estate experts, and other influential colleagues. These networks become invaluable resources for exploring innovative financing options and discovering investment opportunities that others might overlook. Trusted advisors can offer insights on the latest market trends, enabling them to maneuver strategically through financial markets and make well-informed decisions. Furthermore, continuous education is key. Wealthy individuals are voracious learners, constantly updating their knowledge of financial markets, investment strategies, and economic forecasts. This knowledge empowers them to confidently use debt for income generation, always staying a step ahead of market trends. Finally, let's talk about the long-term perspective. The wealthy don't see debt as a short-term play. They have the patience to watch their investments grow over years, sometimes decades, understanding that wealth accumulation often requires time and perseverance. This long-term outlook turns temporary debts into significant assets, highlighting the strategic advantage of turning liabilities into substantial wealth. Curious to implement these strategies into your own financial playbook? Switching focus, let's examine how the wealthy leverage debt in business ventures. Entrepreneurs and investors deploy borrowed funds to fuel business growth, driving innovation and expanding market presence without depleting their capital reserves. Consider the startup ecosystem. Many successful entrepreneurs launch businesses using venture capital and loans, allowing them to innovate rapidly. This borrowed capital enables them to hire top talent, invest in research and development, and quickly scale operations. As their businesses grow and generate revenue, they reinvest profits into further expansion, paying down debt strategically while continuing to build value. In addition, they utilize debt for mergers and acquisitions, buying existing companies to expand their portfolio and market share. By acquiring businesses that have positive cash flows, they can use the proceeds to pay off the acquisition debt, transform the business, and turn it into a cash-generating machine. Furthermore, there's an element of flexibility. Debt allows them to pivot and adapt to emerging trends without waiting to accumulate cash reserves. This agility is vital in today's fast-paced business environment, ensuring they can seize opportunities as they arise. In essence, the wealthy harness debt to multiply their wealth, fuel innovation, and adapt to a dynamic world, proving that when handled wisely, debt becomes a cornerstone of substantial financial success. Ready to harness these insights for yourself? Wrapping up, we've seen how the wealthy expertly transform debt into an asset, using it to amplify their wealth through investment, risk management, education, networking, and business growth. This strategic use of debt is key to creating and sustaining wealth. Now, here's a challenge for you. Start examining how you can apply these insights into your own financial journey. Whether it's for personal investment or business growth, rethink how you view debt today. If you found this information valuable, hit that subscribe button and join our community devoted to financial empowerment. By subscribing, you'll gain access to more strategies and insights designed to guide you on your path to financial freedom. Ready to take control of your financial future? Let's get started.